3. There we go.
Yeah.
We should now be live. Let me just turn the volume down. Can you hear me now? Yeah.
Yeah, I can hear you. Can you hear me?
So
are we there?
Tech.
Yeah.
So hi everybody. We're here on Instagram, Facebook, and YouTube. So we're going to try live streaming all 3. As we've been pushing out on social media. Can you hear me?
I can hear you.
Yeah. So as we've been pushing out on social media, we wanted to try and do get Sian back in from Castlegate Financial Services and talk about the property and the finance markets right now. So really sort of looking at where we are, what the markets are doing, how everything is changing because it's changing so quickly, and then also give you a bit of insight as to where we think the markets are going to head, both from the finance side and the property sector. So yeah, you want to introduce yourself, Sian, say hello to everybody, and we'll get started.
I'm Sian Mitchell, Director of Castlegate Financial Services. Yeah, I think David and I have been speaking over the last couple of weeks, and just wanted to jump back on here and talk about just the ever-changing property and financial market, and just answer people's questions and update people on what we think is happening and what we think is going to happen going forward as well.
Yeah. So, I mean, how are the markets right now in terms of the mortgage market? Because obviously things have changed so quickly now with lockdown being eased, and we've kind of seen a massive uplift straight away in just the property market in general, both buyers and tenants and everybody sort of rushing out. And, you know, just today we've received 2 asking price offers. So people are very quickly getting back to normal.
Yeah.
How are you finding it on the mortgage front?
Yeah, we've had the busiest week this week. I mean, obviously, you know, it went quiet, everybody's locked down, there's not much we can do. And I think because things are easing, it's just been crazy the last couple of days. In regards to people wanting to take mortgages out and buy property, I think that is obviously something that, you know, because we can now view houses and we can make a move, that's happening, and people are jumping on that at the minute. But, you know, mortgage lenders are starting to ease their criteria a little bit now. They've got an idea of where the market's going, or they think it's going to go. But it is still going to be a little bit difficult to get mortgages. You know, loan to value is still reduced, and affordability checks are obviously going to be more strict than they were previously. So it's busy at the minute, but it'd be interesting to see what happens over the next couple of months.
Yeah, I mean, we're finding the sort of consumer sentiment is very much getting out there and getting back to normal. So, I mean, viewings and inquiries have just gone through the roof, particularly in the last week. So I think the pent-up demand from obviously Brexit, then election, and then now with coronavirus, people are very much getting out there and getting back to normal quickly. Obviously, interest rates are low, so they're sort of moving quite quick. But yeah, you can definitely sense that there's going to be changes very quickly as the markets develop. So I know the next sort of question we wanted to cover for people was, is now the right time to buy? What do you see from your perspective on the finances with mortgage rates so low? Is it a good time to buy?
Yeah, I think the thing is, you know, clients keep asking me this, and who knows what's going to happen. This is not something that anybody's been through before. So we've got the history of property crashes and recessions, etc. But who knows what's going to happen? You know, this is something that we've gone into very, very quickly. We've had the difference with this is we've had the you know, the government input in the financial help that they've given us. So I just think that it's one of those situations where if you wanted to buy a house to move, you know, residential property, then why not? If it's a long-term investment, then if the market drops, hang on to it. You know, you won't lose out in that respect. Investment-wise, again, if it's a long-term investment, then why not? Why not purchase the properties? And, you know, yes, there's a chance they're going to drop slightly, so some people might want to wait. But I think at the minute, why wait? I think if it was my advice I'm giving to clients at the minute is if you want to do it and it's a good purchase, then go for it.
Yeah, no, exactly. I mean, from our perspective, whether the time is right to buy is very a personal depending on your circumstances. So if you're buying for your home, you know, it's a long term, like you said, medium to long term, then I would be going ahead as normal, you know, particularly if you've wanted a specific property, it's your dream home, you know, it's on the market now, why wouldn't you? The only people I'd be saying be a little bit more cautious is those that are buying for things like flip projects, refurbishments, short-term kind of investment gains. But even the longer-term investments, you know, if you're buying buy-to-let, really that's done on your return and your yield. So if you're going to get a really good yield now and the rents are high, it's still a good time to buy. So yeah, I think regardless, the market, the other thing that's going to factor in whether you buy now or not is actually how low the interest rates are and how easy finance is. And we've never had that so low, really, have we?
I think it comes down to what we've obviously had quite intense discussions over the last couple of weeks. And as you say, I think short term, anyone in that market at the minute, you're going to sit and wait to see what happens. But yeah, it's all down to balancing that out, because as you say, if you're securing low interest rates, it's, you know, it's all about what you're trying to achieve. So as you say, if it's a residential purchase and that's your dream house and you can do it given the current climate, then why wait? And I think that's what we're finding over this last week where viewings can take place. And obviously we've experienced it, especially in the last few days. But yeah, I don't think, if it was me personally, I don't think that I would be, you know, delaying purchasing if that's what I want to do. So
I'm just looking at the comments and things coming in. Can everybody hear us all right? Because there was a bit of reverberation at the beginning. There was a bit of back. You could hear the mics and the volume. Can everybody hear us all right? If you can, just put it in the comments or give us a thumbs up just so that we can just check everybody can hear us all right. Let's have a look. So yeah, so people are saying it's all fine, good. All this thing of going live, it's crazy. So yeah, I mean, looking at whether it's the right time to buy, then you know we've got a great sort of situation where the interest rates are so low, and you've got a big pent up demand at the moment. So I think people that really need to move and want to move, it's just go for it and, you know, move forward.
Yeah, and I think it's one of those things, you know, because I think it's all about pushing through this and having, you know, that positive attitude, and why stop? You know, I think it's one of those things that everybody's just got to keep going and doing what they want to do, because I think that's our way out of this moving forward. So we know we're going into an up and down market, but there's not one person that you know, I'm speaking to that has any specific information. That, you know, none of them know what's going to happen. So I just think you have to take your individual circumstances and roll with it. And, you know, and as you say, yeah, long term, medium term, then I don't think any change in the market is going to affect you that much.
No, yeah, and it is moving so quickly that nobody really knows the full extent of where this is going to go or what's going to change and how quick. I think people have just got to do more stuff like this, really, just sharing the ideas, sharing the updates of what's going on, asking questions, just letting us know what it is that you need to know. And it is just changing so quickly. So the next thing,
week everything to go by, then there's going to be no drop.
This last week has just been crazy. I've never seen inquiry levels, activity, offers in the last week.
So we're exactly the same.
And it's not on a par either to last year. So if you look at, you'd normally expect this time of year to be reasonably busy because you have like the spring market and then you start going into the summer. But just this last week, I think because you've got that much pent up demand that's been in lockdown, it's certainly sort of boosted the market in a big way.
Yeah,
the next thing then we were going to cover is do we expect house prices to drop? I mean, from our perspective, where we are now, we're getting asking price offers on properties that were priced prior to lockdown. So at the moment, because the market, there was nothing really to force the market to drop, because when we went into lockdown, there was a big demand in the marketplace anyway. So you had everybody that had gone through Brexit and the election and still wanted to buy. So there's that demand is still there. All that lockdown did was put it on pause for sort of 2 months. So what we found is people are coming out. We have had a few, particularly investors, sort of saying, you know, can we we reduce the price? Can we, get a little bit off? But the reality is right now, the demand is so high that there's no reason for sellers to do that. And people do want to move. So we're not seeing any immediate impact on prices. How about you? How are you seeing it from the mortgage perspective?
I think from our side, it's exactly the same, because obviously I've got a large database of investors that from that side, things have slowed down slightly because they're all sat there expecting the market to drop. So everybody from that side of things want to wait because they can to see if they can pick up some deals. However, again, from that side of things, I think the problem with that is, yes, you might be waiting, but you're waiting with lots of other investors that all want those properties. So if the market did drop, you've got a lot of competition to pick them up. So I don't feel that. I think people are waiting for that. I think the other side of it is that mortgage lenders, one of the things that we do have to take into account, which could push that into that direction, is the fact that mortgage lenders are going to be a lot more cautious, and they are being more cautious. Sorry. So they are being more cautious. Sorry, did that go off?
That's right, you're back.
They are being more cautious. So what the situation is obviously the mortgage lenders are predicting that there will be a market drop, and therefore the valuers are just being cautious. So therefore, there might be demand, and people might want to pay the asking price. I had someone yesterday who put £10,000 over the asking price on a property, but that doesn't mean a mortgage lender is going to go out there and agree with that price. And therefore, I think that we just have to bear that in mind. But that may be something that pushes the market, down slightly because they're cautious of it. Yeah,
and we're starting to see that as well, where exactly what you said, where the demand and from the buyers is that they want to buy and they're prepared to pay the market value, but we have started to see some valuations from mortgage lenders coming back saying, small reductions in it, and we were starting to sense that it was because they were hedging against what might be coming. So if the prices do drop, or there is mass unemployment as we come out of furlough and things like that, because in essence, they could be lending to somebody now who is a perfect positioned buyer. They've got a deposit, they've got a great low mortgage, they found their property, they buy it at market value. But then if they lose their job, then effectively the cushion for the bank is that they want a little bit more. So we have started to see that happening. So it is something for us all to keep an eye on, I suppose, because that will have a push down on values.
Yeah.
So, so in answer to that, do we expect house prices to drop? I think not in the short term, but there is a possibility of it happening. And it's one of those of, you can never really time the market. You can't sort of know when it's going to happen. But with those kind of signals of lenders getting a bit tighter, and the fact that we are looking at quite a big recession from the economic data that's coming out, and it's more than likely going to be triggered when furlough and things come to an end, and we start really seeing the financial impact of what we've been doing through the lockdown.
Yeah, I agree.
Yeah, it's going to be something that I think everybody's got to be aware of, that over the next couple of months, things are going to change quite dramatically, I think.
Yeah. No, I agree. I think it's inevitable.
Yeah. It's the next one was, are mortgages easy to get right now as we're speaking?
If you use Castlegate, then I don't think, again, it's your individual circumstances that are going to determine whether it's easy or not to get a mortgage. I mean, we're whole of market brokers, so we can compare everything, but the problem is that, again, it's down to the deposit. So I think, sadly, for people who were hoping to buy a house who had saved a 5% deposit, 10% deposit, I think it's going to be very difficult, especially over the next couple of months when furlough is taken into account, or the situation with the fund, depending on what happens. So that's going to be that's going to be something that stalls that end of the market. 90% mortgages have just been reintroduced by, Virgin, for example, Accord, which is part of Yorkshire Bank, HSBC, but they're very difficult to get past. So it has to be, perfect everything. Yeah. So it's not that it's difficult. Affordability is a lot less than it used to be. So I did a client's affordability about 3-4 months ago, and then I redid it the other day, and it's dropped about 100,000. So there's a huge difference. So some lenders, and what we've got to understand is that some lenders, these are businesses as well, and my contacts within the industry, we've been speaking to many different people in many different areas. The banks, one word was described as they're awash with money. They have a lot of money. This isn't like the credit crunch. The credit crunch, they didn't have any, and they weren't lending between each other. This is very different. So they want to lend. They're just going to pick and choose who they lend to. So bad credit. I have had a guy, massive deposit, at 65% loan to value, and a £96 missed payment on a mobile phone contract, and we cannot pay that. I mean, we're struggling, but we're literally today sourcing that.
And just because of one missed payment?
Because it's so recent.
Yeah, they're taking it as an alarm bell.
Yeah, and so it's paid now because it was an error, but it's basically, we're finding it very, very difficult to place that, because what they've done is just across the board said anyone with bad credit, anyone with missed payments, especially if they're not paid, you're not interested. Whereas 6 weeks ago, we would have had the whole market to choose from pretty much, because it was such a low amount. So that's the kind of thing. You will find that eases off, but when depends on which way the market goes in the next couple of months. So,
yeah. So even though those 90% loan to values are there, their criteria is even stricter on them to some degree, because they're trying to deter.
Yeah, well, bear in mind that there's only, as I said, there's only a handful of lenders that will do that now, at 90%, and that's just recently, this last week or so, come back in the market. So yeah, I mean, they're, for that level, you've got to imagine that their perception of the market is that it's going to drop. So they're not going to want to be advertise the 90% mortgages, but there's no way they're going to put themselves at risk. So they're going to definitely be looking at that. And I would say, as I say, it's employed, it's making sure, a lot of the questions the mortgage lenders are asking at the minute is, has your business been affected, or has your income been affected by COVID? So therefore, when they're looking at the application, it's a case of, right, you've got your 10% deposit. Sorry, my phone is my phone.
Right.
But it's you've got your 10% deposit, but you've not got your everything has to be straight A for you to even attempt to get it. Yeah.
So even though they're offering the high loan to values, they're being restrictive and protecting themselves in the availability. Yeah.
Yeah, definitely.
Well, that kind of answered the next thing that we'd been asked, was what are the loan to values? So you're looking at 90% as a maximum at the moment. Do you think 95% mortgages are going to come back? I've heard rumours that some might do it, but
they will, because like I said, it's not that they don't want to lend, so they're going to come back.
They've got the money.
Yeah, it's just in what capacity and when. And I think that, from a mortgage lender's point of view, their main issue is making sure that they have their protection against the property. So if you're not going to pay your mortgage and they're going to get repossessed, then they want to know that they can sell the property for the price that we're saying it's valued at. So if they're expecting the market to drop, then, if you're buying at 100 grand and you've got a 5% deposit, and then you get repossessed but the market's dropped and it's 85 grand it's worth, then obviously the lenders lose out. So it's going to be they're going to be very selective of who they
take through it. So that kind of leads on. We discussed how lenders are potentially down valuing to kind of get that cushion as well, which is starting to happen. What do you think is next then? Where do you think the markets are going to head? I mean, are lenders just going to carry on being cautious for now, down valuing where they think they need to, being very selective over who they take. I think from what I can see, they're going to almost keep doing it at least until the furlough scheme finishes, and then we start to see what life is going to be like after that. Because I can see that there's a big chance of, larger unemployment as soon as the furlough scheme finishes. And I think naturally lenders are going to wait to see if that actually plays out and then how that affects their current loans, because, they could have people that can't afford their mortgage anymore, that have had the mortgage for years,
No, and this is going to be the interesting thing, and I'm quite, it's, as I say, because we're balancing the fact that lenders want to lend, everybody wants to move forward, so I think we're going to have to go into a space where people are sat waiting to see what happens. So we're going to have to go into a kind of cautious position, and the mortgage lender is going to have to do that, and everybody's going to do that, because, as you say, at this point it feels a little bit like we're in limbo, because everybody's just got out of social distance, lockdown kind of eased. We're all feeling a little bit more positive about things. The weather's been great. Nobody's really feeling the effect of this period of time where nothing happened. So, as you say, what happens when the reality hits and businesses have to make redundancies? The lenders are assessing affordability. If you imagine, I think I said this before, but you imagine you're a self-employed hairdresser, and last year you earned 50 grand. And then you're going to go to the mortgage lender and say, I earned 50 grand. And they're going to go, well, yeah, but we know you didn't work for this period of time. So we're not going to take last year's figures. We're going to estimate what this year's figures will be. And as you say, you're going to find that people whose affordability was good might lose their jobs. The market, lenders might have to repossess property, and it's all going to balance itself out. So I think we're going to go from, like you said, I think we're going from this buzz at the minute and this up, and I think we're going to go down, and then I'm going to think we'll find our way up, and I think we're just going to bounce around until we get back to where we need to be.
Yeah, I think it's, we're definitely seeing a sort of bubble at the moment, a bit of a short-term bubble of demand, because everybody's just coming out of lockdown and, rates are so low, they want to move, and they're all sort of acting and going for it straight away. But you can see the sort of signs already in the economy that this is going to get a lot worse before it gets better. So we've got a bubble now where people can make the move. If they're in a good, strong position, then go for it, and move. But the realistic sort of medium to long term is that this is going to be quite a bad recession. Yeah, and I think that's one of the things we're warning our clients about now, is that it's trying to plan for that now and trying to protect yourself. And that's looking at everything, looking at your expenditure, looking at the mortgage product you're on now, looking at what your property portfolio, is it performing? Are you renting at the levels you should be? Are you getting the returns you should be? So I think it's kind of looking at the whole picture of how you're prepared.
Yeah, and I think one of the things we've been preparing our clients for is and speaking to them is basically saying this is a perfect opportunity. I think one way is, one way of looking at this is working out what do you want in the future, and as you said, preparing for the worst. So at this moment in time, we're suggesting that people sit down and really take this seriously, because if you prepare for the worst, then you know what's going to happen, you're ready for it, and you can survive that situation. So I think that it's absolutely the right time at the minute to sit there and look at a financial plan, and whatever that is. So we're speaking with clients and saying, right, let's reassess your mortgage, because interest rates are ridiculously low. I thought they were low before, but this is just crazy. Let's look at your buildings insurance. Is that the lowest you can get? Let's look at your life insurance premiums. Let's look at your, as you say, your rental. Is that at the right level? Because as you said, there's demand for that. Making sure that your your car insurance, between us and
looking at every expenditure you've got and seeing.
Well, and between you and I, we're in a position where we're connected to some of the top professionals in Nottingham, at least, and and other places. But it's making sure, you've got this right and just ticking them off, because we can assess that, and if people look at that situation and go, right, I now know that I've got good cover, or good, good, the best premium for myself. My financial position is X. This is what it looks like in 3 months' time. This is what it looks like in 6 months. I feel comfortable with that. Then I think it puts people in the position where, any recession is not going to be as scary as it sounds, or as scary as it will be if you don't do that.
Yeah, no, totally. And it's not about, we've said it a few times, it's not about doom and gloom and kind of scaremongering, but from what you see in the finance and what we see in the property side of things, is we are going to go into a big recession, probably the biggest we've ever encountered, and it's hard to project what's going to happen next and when things are going to happen, but the reality is it is going to happen. And I think that's where now we've really got to start getting everybody to look at the situation they're in and planning, like you said, for the worst, even though it might not go that far. But it's literally looking at every single expenditure, trying to get as lean as you can, trying to maximize your investments, do everything that you can just to be able to ride it out, because we don't know how long it's going to take. We don't know how long it's going to go on for. But the chances are, in the next 6 months, we're going to start feeling the impact of it, because I think at the moment, whilst we're still in a bubble where you've got furlough covering a huge amount of the employed sector, we're still spending a huge amount of money to sort of deal with the virus. And I couldn't believe it when in May they said that the government had borrowed more money in 1 month than they had in a whole year.
Exactly.
The year before, and people need to get the scale of that that is a monumental amount of money that the government have to pay back. And the only way they're going to get that back is through taxes and things like that. So they're going to need people to get back to work and be making those.
I think it's it's inevitable. It's we can stay positive, and and like I say, I feel like we're in a bubble as well. I think it's just this, what everybody's optimistic at the minute, but the sun's gone, so hopefully that comes back out soon. But how long does that last? And I think until the effects are felt personally, at the moment, nobody's really feeling it themselves. Everybody's okay. So I think now it's a case of, definitely. I'm taking the same stance as you. Is like, guys, I get it. We're okay, but let's just see and make sure we're okay now and then. And just looking at the options that you've got, if that happens, what we're going to do. If that happens, what we're going to do.
Very much forward planning. I'm trying to get people, and that's why I think these Q&As and these live streams, we'll do more and more of them in some ways, to just allow people the opportunity to sort of talk about these things, ask questions, speak to experts, because undoubtedly, we need to be all becoming a bit more aware of what's going on. Like you said, we're all okay right now, but the clear signs are that this is going to get pretty bad. So part of what we wanted to achieve out of this is just saying to people, look, everybody's here to help. And where we've all helped each other through a lockdown period now, we're all going to have to help each other even more to get through the recession that's coming. So so it's kind of, offering help and advice wherever we can. We have had a couple of questions in during this. So Sam Davis has asked, do you think home improvement loans secured on properties will be affected, more or less likely to be granted with the current sort of market as it is? Do you think home improvement loans secured on properties will be affected?
In regards to mortgage lenders offering home improvement loans, obviously taking the extra borrowing on your mortgage, it's not going to be about those aren't going to be affected if you tick all the boxes. And the mortgage lenders are going to be more strict because what they want to make sure is that you're taking the money out or you're securing that loan against the property for the purpose that you're saying it is for. So if you're saying it's home improvements, they're probably going to ask you for all of your quotes, all of your invoices, and want that proved. So it's just about their criteria being more strict. So I don't, they're not going to be affected as in they're still going to be available, but yeah, it's going to be, you're going to have to tick all the boxes. And
so it's basically, they'll still be there like the mortgages are, but the criteria might get much more stricter because it's, naturally they're going to want to know that their money's being used to add. I think anything with home improvements is they want to know that it's actually going to add the value. Otherwise, what's the point?
Yeah, exactly.
Because the money is going to be secured against the asset. So, so Sam followed up with that, just thinking that people might choose to improve or extend instead of move, which is a good point, actually, that people might take this period to, rather than move home and go through the thing of selling and buying, is maybe investing in their current home, extend it. So.
Yeah, again, it's the same situation, Sam, because the lenders want to lend. So if you have a legitimate reason to borrow money and you want to borrow money against your house, rates are really low. As long as your affordability stacks up, as long as they've got enough security in the property, and as long as they can confirm that you are using your money for an extension or whatever it is that you want to do, absolutely. And the good thing is, if you get that money out now, you've got it in the bank, you've got that security. Then when and if this recession comes and how big it is, you might find that you're going to be able to get your extension done, cost price, and put a value on your property. So if you're not intending on moving at all, then my advice is get it now whilst the bubble's still,
thanks for that question, Sam, because that actually brought up a subject that I'd not thought about, but it's actually quite a good option for people that may have been thinking of moving but weren't certain of it, that you could actually look at that option, because with the interest rates being so low, those loans would, it's been a better time to do it, I suppose, and lend them and borrow the money. Simon's asked a question.
No, we're not answering Simon's questions.
Say again.
We don't answer Simon's questions.
Have you noticed a change in inquiries since lockdown? Perhaps less interest in high-rise flats and more interest in properties with gardens, extra rooms to facilitate people to work from home easier. That's actually been quite a hot topic within a estate agency, and it certainly has made country homes, ones that have got space for home offices, annexes, things like that, they have definitely seen a kind of uplift in inquiries and demand. It hasn't necessarily seen that it's dropped in other properties though, because I think the demand in general for the market has been high. So we're seeing now people are flooding out and buying apartments in the city, because most of the market for that, they're moving because they particularly want to live in an apartment and they want a set number of bedrooms. Obviously, those with roof terraces and balconies and things like that are getting more interest because they want the outdoor space if they can get it. And definitely those, when you're getting into the higher end of the market and you're looking for desirable homes, then those that have those extras like bigger gardens and home office facilities are proving.
I think it's had an impact definitely on people living in apartments and stadia. I think people have realised the benefit of having that outdoor space. I don't think inquiries have really changed, on that basis because of lockdown. I think what you'll find is that more people in apartments and things like that are probably thinking about, I'd like a garden now, and I'd like some, especially because they've missed the sunshine to that, in that respect. But I don't think inquiries have dropped necessarily. I just think that people have got different motivations because of that.
I think it's certainly made people think a little bit more about their requirements and what's important to them.
Yeah, definitely.
So it's I think everybody's realised through the period of lockdown that it was another subject that was talked about in a estate agency, that there's one way to sort of motivate somebody to actually move, and that is lock them in their house for 2 months, and then they suddenly realize whether that property works for them or not. So if they were ever motivated to sell and then they're locked in it for 2 months, they're even more motivated now to move.
Probably why. Sorry.
And that is why it's a driver thing of, you know, if you didn't like living there before, now you don't like living there even more, you're gonna make that move. And I think it's allowed people to look at their options a bit more and consider things.
But I think you'll also find that people, you know, just in that period of time, whilst the weather's been good and they've been locked down and it's been frustrating, as they start going out again, I think that need to move will change because they can get out and about. So I just think it's, you know, how the market is right now, and kind of like you say, the motivations based on how you feel at the time sometimes. We'll soon find out. I know. So any more questions? Is anybody, we're on Instagram, we're on Facebook, we're on YouTube. So if anybody's got any questions at all, if you want to type them in now and let us know, we'll try and cover them while we're here before we go. But yeah, in some ways it's a bit of a sort of wrap up for where we are now, and just sort of saying to people that, you know, without a doubt, we're in a bit of a bubble at the moment, and everything is going full steam ahead, but it's just being cautious and being aware of everything and really sort of reaching out. I mean, part of why we're doing this is to say to people, look, if you need to talk about anything to do with property, anything to do with finance and mortgages, insurance, you know, is use these platforms, reach out to us. By all means, if people want to contact in the feeds here, just let us know. You know, both myself and Sian can reach out to you and just have a consultation. You know, it's completely free, just to have a chat and just say, look, what things are you considering? What are you worried about? What are you planning for the future? Because like you said, I think people now are probably evaluating their future plans about what they want to do, their goals. I think the thing that we've been discussing, and the important thing is really just to give people a peace of mind. So is your expenditure the best it can be? Have you planned for what might happen in the future? And I think it's just having a chat with ourselves. And, you know, there's products and services that we can't offer, but we can speak to people that we know are you know, you're going to get the best service, you're going to get the best prices. And I think it's just an overall assessment now. You know, do you know where you are? Do you know where you're going to be? Are you going to be okay when this hits? Because it's coming. And just making sure people have got peace of mind, because I think that's the most important thing out of this. And if you know what your future looks like over the next couple of months and the next year, then I think your peace of mind, you know, your mental health stays in the right place. And, you know, interestingly, I was speaking to a client who's a physio, and he said that some of his clients, he deals with wellness and mental health as well. And he was saying that their mental health is connected to their financial position, which is connected to the stress, which is causing the problems. So I think it's all connected. And I, you know, I throw that in because I just think that it's one of those things now where have a look at it, make a plan, and then have some peace of mind.
Yeah, it does. It's definitely, I mean, finances, they've always said, is a root cause of a lot of mental health issues and stress, because, you know, it is in most people's eyes a really important thing, and a lot hinges on your financial circumstances. So, you know, the fact that I think we've always had a stigma in the UK about talking about money and, you know, even talking about the value of homes and stuff like that. And I think people just need to open up a little bit now and talk to people like us, and just sort of know that we're here purely to help and advise. You know, it's our expertise that can help people change that situation. So if they are stressed about money, or not sure about whether they can budget better, or you know, what options do they have in terms of their property? You know, would it be good to sell now? Would it be better to stay and extend? Or there's so many different options open to people.
And it's so quick to work it out. So.
Yeah, exactly. It's relatively quick, and it's just making that first thing. So I suppose to finish off, it's just saying to people, you know, contact us. You know, drop a message below, DM us, whatever you want to do, just so that we can, you know, offer our expertise, help if we can. And
And we'll
finish on
update you soon.
Yeah, no, we'll keep doing these. So if everybody, if there's anything that we've not been able to answer in these videos, by all means put the questions in the messages below, and we can go back on, answer those for people after, and then at the same time we'll know what to put in future videos and lives as well. So yeah, cool. Great. So unless anybody's got anything else, we'll say goodbye. And thanks for joining us again, Sian, and we'll catch up.
Thank you very much. Yeah, we'll speak soon. All right. I'm sure. See you later.
Speak to you all soon. Bye. Bye.
Bye.